Hello everyone, and welcome to today's webinar on Business Credit Scores Decoded. I'd like to thank everybody for taking the time to attend this webinar today. If you've ever wanted to know more about business credit scores, today is your day. Today we're going to dive into business credit scores. We're going to decode them. We're going to go through. We're going to take a look at the 3 business credit reporting agencies, take a look at all of their individual score models. How their score models work. We're going to talk about how a business can establish scores and use that to get credit. We're even going to take a look at a real live process of a client being able to build business credit scores for their business and use those business credit scores to get money. So we got a lot of stuff to go over. Now, I will tell you that if you've never been on one of my webinars before, I will give you a heads up. I'm a fast talker. I get excited about things. I'm excited about business credit, and when I get excited, I kind of get on a roll and go at a pretty rapid pace. Don't worry. If you don't have time to write down what's on these slides, at the end, I'll give you my email address where you could email me for a playback of this webinar, and I could definitely go ahead and send you a playback of the webinar if you'd like a playback if you miss anything. That being said, let me introduce myself. If you've never met me before, my name is Ty Crandall. I'm actually the Director of Business Credit Services here at CreditSuite. A little bit of my history. I've been in the finance industry for going on about 14 years. The last 4 years, I owned a credit repair company. I built a credit repair business from the scratch. I built it over the course of 4 years and successfully sold that company last year. In large part, I sold the company due to my success with business credit. About that time, a good friend of mine, Mike Citron, the owner of CreditSuite, was looking for somebody to come in here and help his clients, help other people have the ability to go out and offer and sell business credit, and invited me to join the team. And Mike and I go back a long way, and it just seemed to make a lot of sense. I had just sold my credit repair business in large part due to my success with business credit, and at the same time, CreditSuite was looking to start a business credit division. So that brings me to where I am today. This year, I've been very blessed to have an opportunity to help a lot of people sell business credit and make a lot of money selling business credit. I'm also a speaker. I do speaking engagements worldwide. I've even got a couple published books, one of which you can see here on the page. But enough about me, blah, blah. I could go on and on. Let me dive into the content at hand. I just wanted to give you a little bit of idea of my background, who I am. So we're going to get started with business credit scores. We're going to dive right in and get into kind of the fundamentals of what business credit scores are. If you're not familiar with business credit, what business credit scores are is these are scores that are for a business, okay? So they're in the business name. With business credit, the business builds its own credit profile and score. Okay, so it's not like personal credit where you're dealing with a FICO score and a personal credit report. This is actually talking about a business credit report and a business credit score. Now, once a business has an established credit profile and score, that business is then able to start actually qualifying for credit. Now, business credit scores reflect a business's ability to pay, not the business owners. So since the business itself qualifies for the credit, in some cases there's no personal credit check required from the business owners whatsoever. Now, the business can use those credit scores once built to qualify for credit cards, like revolving credit cards like Staples, Lowe's, Sam's Club, Costco, Walmart, MasterCard, Visa, American Express. The business can also qualify for credit lines, even loans, once those business credit scores are actually built. Now, a business credit score, by definition, is a mathematical model that's used to depict a business's risk of going 90 days late on an account within the next 12 months. Now, this is important because a lot of you on the call are familiar with personal credit scores. And a consumer credit score is a mathematical model that's used to depict a consumer's risk of going 90 days late also, but it's within 24 months. So that's one of the biggest differences with business versus personal credit scores. It's one of the main differences, although there are a lot, is business credit scores basically gauge the risk of somebody going late within the next 12 months, whereas consumer scores gauge the risk of somebody going late within the next 24 months. A business credit score reflects the business's likelihood of defaulting on an obligation, not the business owner's. So the business credit score is based on how the business obligations are being paid, not how the business owner is paying their personal obligations. So let me introduce you to the business credit reporting agencies. Now, we're not going to spend a lot of time on these three agencies. We'll do that in a whole nother webinar because we could go on and on about them. But what I am going to do is give you a brief kind of history of the business credit reporting agency and then start diving into their individual credit scores. And I mean scores is plural because a lot of them offer multiple different scoring models. Now, Dun & Bradstreet is by far, the biggest and major business credit reporting agency. They were created in 1841. They're known as D&B. So you'll hear this a lot. If you hear somebody refer to a D&B, they're referring to Dun & Bradstreet. And they also hold the largest supply of worldwide business information with over 206 million records. That's how many businesses they have on file that they track, is over $206 million today, or 206 million records to date. Obtaining a DUNS number is the first step towards getting business credit scores with Dun & Bradstreet. The DUNS number is the Data Universal Numbering System, or DUNS, and it's a business identifier code provided by D&B, provided by Dun & Bradstreet. Now, this identifier was actually developed way back in 1963 to support D&B's credit reporting practices. Now, the DUNS number is a 9-digit number issued by Dun & Bradstreet, and it's assigned to each business location in the D&B database, each having a unique, separate, and distinct operation for that purpose. Every business must first have a DUNS number before D&B will assign a Paydex business credit score. This is important. D&B is the only one that does this. They're the only one that have like a pre-step to getting their business credit score, and their pre-step is their DUNS number. You cannot get a Paydex score with them without it. It is the first step in securing a Paydex score with D&B, is having that DUNS number. Now, the DUNS number is the preferred method worldwide of identifying businesses. Okay, so unlike national employment identification numbers, which most of us are familiar with, I mean, most people are familiar with EINs for your business, but a DUNS number may be issued to any business in the world. That's one of the biggest differences. Okay, as an EIN is kind of our government's way of knowing your business, whereas a DUNS number is a worldwide identifier for your business. And it's issued by many foreign governments, including the U.S. and Australia, the European Commission, even the United Nations. So let me give you an example here. If you're a contractor and you want to go do work with the UN or with the U.S. government, they require a DUNS number. They require you have a DUNS number to even get contracts and do work with those kind of governments. Even the European Commission is actually that way. All in all, there's more than 50 global industry and trade associations that recognize, recommend, or require the actual DUNS number. Now, Dun & Bradstreet's score. The main credit score used in the business world is known as a Paydex score, provided by Dun & Bradstreet. You've probably heard of this before. So you've probably heard somebody mention to you before they have a good Paydex or an 80 Paydex or a Paydex with D&B. Paydex is D&B's credit score. Now, from D&B's actual site, in quotations, their definition is the D&B Paydex score is D&B's unique dollar-weighted numerical indicator of how a firm paid its bills over the last year and is based on trade experiences reported to D&B by various vendors. Okay, so that is actually from their actual site. It gives you an idea of their exact definition of what their score is. Now, I'm going to stop here because I've actually had some clients ask, and they say, well, does that mean that they only look at data over the last 12 months while calculating the score? The answer to that is no. What they're doing is they're calculating the risk of somebody defaulting over a 12-month period, but they will take into account all the information that is on that actual report. And in a minute, we're going to go into what they actually do show you on their reports. Now, the Paydex score ranges from 0 to 100, with 100 being the highest score a business can obtain. A score of 80 or higher is considered good or healthy credit. It's kind of the equivalent of like 700 in the consumer world, right? You can get as high as 850, but if you have a 700 consumer score, that's pretty good credit. The same thing here. An 80 reflects good credit or a good, healthy business credit profile. Now, a business can obtain a good business Paydex credit score by ensuring payments are made promptly to suppliers and vendors. So let's take a look at personal credit scoring because I'm about to give you a direct comparison of Paydex versus personal credit score. And as most of you know on the phone or on the call today or on the webinar today, the personal consumer scores are broken down into 5 factors: payment history, utilization, length of credit history, accumulation, and new credit mix. Okay, there's 5 components that make up the actual score itself. And it's a little bit tougher, more confusing, much harder to build a good personal score because it's tough to control things like credit mix, length of credit history. Some of these factors are very tough to control, so it's hard for people to jump up and have good scores very quickly. Now, business credit scores, especially with D&B, are very different because they're based on the business's ability to pay its bills on time. So the number literally reflects exactly how that business pays its bills. That's exactly what the number actually reflects. So the business credit score, the Paydex score, reflects how early or late a business pays its bills. For example, if they pay their bills promptly or on time, the business will have an 80 score. If they actually paid their bills early, they'd have a 100 score. If they paid their bills 90 days late, they'd have a 30 score, and so on and so on. Now see, this is very interesting because remember, the consumer scores are made up of 5 factors. Business credit scores with Paydex and with D&B are only based on one thing: how's the business pay its bills? If it pays its bills, 3 weeks or a week early, it gets this score. If it pays it 3 weeks late, it gets this score. That number literally reflects the time period that that business pays its bills. Much different than consumer scores. Now, a business will need a Paydex score of 80 to obtain the most favorable financing. As we just saw, 80 literally means that they're paying their bills on time. So they either need to pay their bills on time or early to be able to obtain the most favorable financing. And this score simply reflects the business's ability to pay its bills on time. So to obtain a Paydex score, a business will need at least about 5 trade accounts reporting to their profile. This isn't exactly accurate. You could really actually get only 2 or 3 accounts and probably still get a Paydex score. But to really start the beginning of a solid credit profile and to really build a good, decent, deep Paydex score to start, you're going to want to have about 5 accounts. And it can take as long as 90 days for those trades to report and score to be established. Okay, D&B will quote that it takes up to 3 reporting cycles, which is basically about 90 days. Although you could really, and we've seen Paydex scores established as soon as 30 days, 60 days. So 90 days is usually as long as it takes for somebody to be able to establish Paydex score once trade lines are reported on their credit report. And the business credit score itself is calculated by using as many as 875 payments. Okay, this is important because, again, as I just said, they don't just look at what you did in the last 12 months. They're looking at all the data on the report. Their score model can actually use up to 875 total accounts in their algorithm to be able to calculate what the actual Paydex score truly is. Now, it's important for a business owner to have accounts report favorable payment history. So if bills are paid on time, the business credit score will be positive. But if payments are paid late, then the Paydex business credit scores will obviously drop. How low the scores drop, as you just saw, depends on how late the bill is paid. The Paydex score will adjust accordingly to how early or late the bills are paid. Okay, so if somebody has an 80 Paydex and then they start reporting late, then that score is going to take into account the bills that they paid on time and the bills that they calculate or actually were paid late. Another important aspect of the Paydex is that with most business owners aren't aware of is Paydex's weighted average score. So this score gives more weight to the trade accounts that report higher amounts of credit extended and less weight to trade accounts that are reporting lower dollar amounts of credit. Okay, so look at this. With this weighted average, they're telling you they're giving more credit to accounts with higher limits than accounts with lower limits. So if a business owner is having any trouble meeting all their credit payback eligibility or obligations, basically if the business owner is struggling to pay the bill, then in other words, they know that they're going to have to pay a bill late, then it's important for that business owner to be sure to pay the largest dollar creditors first because of that weighted average. This way their reporting, which carries more weight in the business Paydex score, will remain positive. Okay, so D&B reports. Dun & Bradstreet lists on their reports details on payments the business has made, for each individual account, including their full payment record, their upper credit limit, how much they currently owe on each account, how much is past due, what the terms of the account are, and when the account was reported and last updated. Now keep in mind, I'm talking about what is on the reports, not what's calculated into the score. I just threw this in because I wanted you to get an idea, if you've never seen one, of what kind of data, what kind of information D&B actually shares on their actual credit reports. Extra information D&B provides includes detailed financial information such as current assets, liabilities, working capital, net worth, sales, new profit and loss, and more. Just like anything else, you know, when you go to apply for something in the business world, you supply a lot of this data on the application. And if you've supplied a lot of that data on the application, then it's typically going to show up on that D&B report. D&B reports also list payment details for each account. They also add detailed commentary to the report indicating payment patterns. Okay, D&B's Supplier Evaluation Risk Rating, SER. So even if you are familiar with Paydex, I would probably guess less than 1% of the people on this webinar today have heard of the SER. Okay, this is D&B's Supplier Evaluation Risk Rating. This isn't something that you're going to see a lot, but I still wanted to touch base on it with you so you could at least see the other score models that these agencies provide. Now, this rating predicts the likelihood that a company will file for bankruptcy and cease operations within the next 12 months. This score ranges from 1 to 9, with 1 being the lowest risk and 9 being the highest risk. In a lot of cases, you'll see this SER score on the business credit report from D&B along with the Paydex score. Okay, another score is the D&B Supplier Stability Indicator, or the SSI, and this model predicts the likelihood that a supplier will encounter a large and significant financial or operational stress over the next 90 days. And this score ranges from 0 to 10, with 0 being the lowest risk and 10 being the highest risk. So, let's move on to Experian. Now, please note, I'm moving kind of in order here. Well, not kind of, exactly in order. D&B by far is the biggest. They're the big dog in the business credit world. Experian is second. Equifax is an afterthought. They're really not big in the business credit world at all. So Experian really is the second most popular business credit reporting agency. Now, Experian actually stemmed from TRW, which was founded all the way back in 1901. Okay, that's interesting. They're actually the oldest credit bureau. A lot of people don't know that. They provide business credit evaluations for over 27 million small businesses and corporations. This is the second biggest player. They hold 27 million business records compared with Dun & Bradstreet's 206 million records. So it gives you an idea of the scale of how big D&B is in the business credit world compared to the other less sized companies with Experian and Equifax. And Experian's headquarters is in Dublin, Ireland. Okay, again, most people don't know that. So I just wanted to throw that on the slide because a lot of people, of course, think that Experian is housed in the United States because they deal with United States data. They obviously have offices here, but their actual headquarters is in Dublin, Ireland. So Experian's IntelliScore. Experian's most recent score system is known as IntelliScore Plus. Now, you'll commonly won't hear the plus. When you're hearing people talk about Experian score, you'll commonly hear it referred to as IntelliScore, okay, which they boast is the next level in credit scoring. This method was released in 2008. Again, I'm talking about the IntelliScore Plus. IntelliScore's been around for a while. It was their Plus model, their upgraded version that was just released in 2008. IntelliScore Plus takes into account hundreds of variables to offer a business credit score between 0 to 100, with 100 being the highest. Now, IntelliScore Plus is advertised as a highly predictive score that provides a very detailed and accurate reflection of a business's risk. IntelliScore actually predicts a business's risk of going seriously delinquent or over 91 days late or having a major financial issue such as a bankruptcy within the next 12 months. Okay, so pretty common here, same at this point, same as D&B. They're looking fundamentally at a business's risk of going 90 days late in the next 12 months. Okay, so that part of the score is similar to D&B's Paydex score. The 0 to 100, this is where things get different. The 0 to 100 is a percentile score that reflects the percentage of businesses that score higher or lower than the specific business being looked at. Okay, let me give you an example. So for example, if the business has a score of 20, this means that company scores better than 19% of other businesses. This also means that 80% of other businesses score higher than that business. Okay, so you with me? The score basically is if they have a 20, that means 80% of other businesses have better scores than they do. And that also means about 19% have less score than they do. So that's actually what the score reflects, which is very different than Paydex. IntelliScore is already being widely used. Many of the largest financial institutions worldwide use it, along with over half of the top 25 P&C insurers and most major telecommunications and utility firms. I'm telling you this because I want you to get an idea of who's using IntelliScore. Okay, industry leaders in transportation, manufacturing, technology have also been known to use IntelliScore as their primary risk indicating model. Now, the new IntelliScore Plus has over 800 aggregates or factors that affect the credit score. Some are assessed on the more than 7.2 million businesses in Experian's actual database that they score. Remember, they've got a larger database, but they only have scores issued for a smaller percentage of those actual companies. Experian first takes a business and looks at data segments such as firmographics, public records, collections, and trade information, and then places each business in one of the three different models. The first is their commercial model for small, medium, and large businesses. The second is their blended owner model, where the commercial data is then linked with the owner's information. Okay, we all know Experian is in the consumer field too, right? I mean, I'm pretty sure everybody on the call knows that. So they the second option is a blended model where it does take into account the personal credit of the business owner. That's important to know that Experian does offer that because some creditors will pull that. Thirdly, there's the IntelliScore Plus or their percentile score. So there's actually three different versions here a client can get. The IntelliScore Plus is what we've been talking about, but their blended owner model is also available and a commercial model is also available through Experian. So Experian's IntelliScore breakdown. I'm going to kind of go through this with you based on percentages of what make up that score. Just like we looked at the consumer breakdown. We just looked at the 5 factors that affect consumer scores and their breakdown. We're going to do the same thing with Experian's IntelliScore here. Okay, just like FICO, it has multiple facets to the entire score makeup. The score is still based on the payment history of the business, but many other factors tie into the percentages of the overall score. So the historical behavior or payment history accounts for 5 to 10% of the total score. Okay, current payment status, trade balances, and percent of accounts delinquent accounts for 50 to 60% of the score makeup. Okay, the business's credit utilization affects 10 to 15% of the total score. This has to do with the amount of credit that's been extended to the business in relation to the balances they currently have on those accounts. Okay, the company profile, age of business, industry risk, and size of business assessed by number of employees accounts for 5 to 10% of a total score. And 10 to 15% of the total score is determined based on the derogatory items, collections, liens, judgments, and bankruptcy that business actually has. Now, when Experian is assigning a business a credit score, they take many factors into account. They refer to those factors as predictive data and use this data to better determine a business's lending risk. So multiple factors affect the score, including average balances on accounts, all those things we just talked about. Okay, so now let's jump to Equifax. Equifax is the oldest and largest credit bureau in existence today. Actually, I think they were around before Experian, so I think I misspoke when I said that. That's right. They were in 1898, and Experian was actually, or TRW was created in 1901. So Experian was 1901, and Equifax is the oldest in 1898, 70 years before the creation of TransUnion. It's kind of crazy if you think about it, right? I mean, Equifax was around 70 years before TransUnion was. Equifax was gathering details about people, including their marital troubles, jobs, school history, childhood, sex life, political activities, and more. And in response, the U.S. Congress met in 1971. It enacted the Fair Credit Reporting Act. You know, a lot of people don't know that history. They don't know that, you know, what happened. Equifax back in the day, they used to reward their employees for getting the most dirty information. I mean, it was sick. They would call your neighbor, find out you were getting a divorce, then they would call your other neighbors and sell that information to them. That's what they were doing. It was crazy. They had no level of evaluating whether the data was true or not true. It was just they would gather data and sell it to anybody that would buy it. Now, what happened is in 1971, when the Fair Credit Reporting Act came out, they started going digital. Okay, Equifax was moving into a digital age where their records were going to be computerized, and that's one of the reasons Congress stepped in 1971 and came up with the Fair Credit Reporting Act, because they knew Equifax was doing things that they weren't supposed to be doing, and they knew the minute it went electronic, it was going to start happening on a mass scale. So it was kind of Equifax's, the things they were doing, their business practices, that really led to the Fair Credit Reporting Act, which a lot of people don't know. Equifax's credit risk score. Equifax's main business credit score is the credit risk score. This score was created to predict the probability of a business customer becoming seriously delinquent on supplier accounts or bankrupt within the 12-month period, same as the other two. Credit scores range from 1 to 100, with a lower score indicating a higher risk of serious delinquency, exactly the same as the other two. By definition, the score predicts the likelihood of a business incurring 90 days delinquent or charge off in the next 12 months, exactly the same as the other two. Scores of 90 and above express that obligations are being paid as agreed. A little bit different than the other two. Scores from 80 to 89 indicate payments are being made 1 to 30 days late. Scores of 60 to 79 represent payments being paid 31 to 60 days late. Scores between 40 and 59 indicate somebody's paying 61 to 90 days late. Scores between 20 to 39 mean the obligations are being paid 91 to 120 days late. Scores between 1 and 19 mean the obligations are being paid 120 days past due. Okay, this is very different than what you've seen on both the other two bureaus. Okay, so Equifax also provides a business credit score for suppliers known as their Small Business Credit Risk Score for suppliers. This model is designed to help credit grantors improve their risk assessment and reduce delinquency rates while helping to improve profitability. Okay, and the score utilizes unique bank loans, lease information, credit card data, telco and utility, credit history, supplier information, public records, firmographics data from their own Equifax commercial database. And the Small Business Credit Risk Score for suppliers ranges from 101 to 816. Much like with D&B, you could pull an Equifax report and sometimes get multiple of these scores on there. So you might see one report and see multiple scores listed, including this risk score for suppliers, which ranges from 101 to 816. So Equifax offers a business failure risk score with many reports also, and this score predicts the likelihood that the business will fail or file bankruptcy within the next 12 months. Guys, you're seeing this common. This is a pattern we're seeing, right? These business credit reporting agencies kind of all offer this secondary score, which is used to depict if the business is probably going to go bankrupt or not. Okay, so that's common with Equifax. You also saw that mentioned with D&B. This model helps identify businesses that pose a great risk of failure to the suppliers and credit grantors so they can take appropriate action. So Paydex, and now we're going to kind of get into a score summary. What we're going to do now is I want to go ahead and summarize what we've talked about here with these business credit scores. Then we're going to dive into the funding suite. I'm actually going to walk through and show you the process of building business credit, the process of using business credit and of getting funding, and also of obtaining business credit scores, building business credit scores, and using those credit scores to get cash funding. So Paydex and Telescore and the Small Business Risk Score are the most popular business credit scores. We dove into a lot. We talked about, 9, 10 different models here today. But Paydex and Telescore, Paydex from D&B and Telescore from Experian, Small Business Risk Score from Equifax, these are the 3 most common of the business credit scores. And a positive score can be attained in as little as 60 to 90 days with all 3 business credit reporting agencies. As I discussed earlier, I've seen it done as little as 30 days, but I always like to, set the expectation longer out than it really is. So I'm going to say in this slide that it could take 60 to 90 days, maybe even sooner, to establish business credit scores. And pretty much with all 3, paying business bills as agreed will net a positive credit score at all 3 reporting agencies. Even though Experian's model is a little bit off, it's a little bit different than the other 2. all three are fundamentally the same in the fact that if the business is paying its bills as agreed, then it's typically going to have a good business credit score. And ladies and gentlemen, this is why business credit is so powerful, because it takes years of well-disciplined borrowing for a person to establish a good, positive, strong, deep consumer credit score. Somebody could do the same thing in the business world within months. I mean, somebody could have a deep, good credit score where they're starting to get high-end credit cards, credit lines in 6 months with business credit, and that couldn't happen in the consumer world. Somebody couldn't start from zero and start getting $10,000 credit cards in 6 months in the consumer world. But in the business world, they absolutely can. And in large part, due to this last statement, because business credit scores are kind of based on common sense. Does the business pay its bills on time? Yes, it has good scores. Okay, a consumer can pay their scores on time, but have, be maxed out on their utilization ratios, have the improper credit mix, have a lot of inquiries, and still have low scores. But in the business world, the business pays its bills on time, it's going to have good scores. So this is one of the big benefits of business credit and why it's so much easier to establish a good business credit score and profile than it definitely is in the consumer world. So that being said, I'm going to take a drink of water here, and let's take a look at how to build exceptional business credit scores through the funding suite. DisputSuite offers a funding suite. It's a turnkey solution for business credit funding. It's something you could actually sell to customers where you don't have to know all this information. It's all done for you. The customer can get in there, they can get money for their business, they can build business credit for their business, they work with coaches, and it's all done. You just make the sale, pocket a bunch of money, and it's a turnkey system for clients to actually be able to build business credit. But even if you're not interested in, using our system to help with your clients, this is still going to give you a good walkthrough of the system, so in real time you can actually see the business credit building. It kind of gives you a chance to see how a business credit profile and score is built, and then how a business actually establishes credit scores. So what you're looking at now is actually the business credit funding suite. Okay, this is something that is offered by DisputSuite. This is something you could sell to customers. It's a turnkey solution for them to be able to get business credit. So ultimately, if you were to sell this, or just to give you an idea of what you're looking at, this is something we call the dashboard. This is the home screen for the business credit funding suite. It's where your clients will do everything they're going to do to go through the process of building business credit. Now, I'm going to go through these sections individually, so I won't kind of spend a bunch of time on the dashboard. Now, one of the first things you need to know about building business credit, your clients need to know, is there are things that lenders look for that you pretty much have to meet to get approved. Okay, you can call them credibility requirements, you can call them building a strong business foundation, but the bottom line is, the biggest thing I hear, and I talked to one person today that actually said the exact same thing, that they tried to build business credit and failed. I hear that a lot. You probably hear that a lot. The problem with business credit building systems that exist today is they don't tell the client what the lender's looking for. That's what we do in our system in step one, and if you're going to not use our system and work with clients one-on-one, it's something you need to know, because there are fundamental things that the lenders look for in order to lend money to somebody, or in order for somebody to build business credit and then eventually be able to get funding, be able to get $50,000 credit lines and $100,000 loans. In order for them to start getting approved for that kind of funding, they're going to typically have to meet these lending requirements. Now, here's the deal. Business is different than consumer. You see, in the consumer world, when you apply for something and get denied, they have to tell you. They have to tell you why. They have to tell you which bureau they pulled. They have to give you all these disclaimers. In the business world, it's not like that. They don't even need to tell you they turned you down. They definitely don't need to tell you why they turned you down. This is why most people fail with building business credit. They try, they go to Home Depot, they apply, they get denied, they have no clue why they were denied, and they give up. Maybe they applied at 5 places, got denied, and give up. And a lot of it is because they don't meet some of the fundamental requirements of what lenders look for. So in step one through the system, we're going through these fundamental requirements. First, we're helping them actually get situated and make sure their corporation is set up correctly. Now, this is important with business credit. A lot of people ask, do you have to be a certain entity? Can any entity, can a partnership, for example, build business credit? Well, you have to think about what the entity is. A corporation, an LLC, separates the business owner from the corporation. A partnership, a C Corp. This means the owner is part of the corporation. Remember, the purpose of business credit is to build credit without the owner having any liability. In order for that to happen, the business owner has to be separate from the business, period. They have to be. Okay, with a partnership, they can't, or an S Corp, for example, or a sole proprietorship, they're not separate from the corporation, so they can never separate their liability. Hope that makes sense. With a corporation or LLC, they are separate from the corporation. Then they can separate their liability. So the first thing we do is explain that to a client, actually go through and help them get set up with the right corporation if they don't meet that requirement. We also help them get set up with a virtual address if they need one. Something else important to know. Okay, lenders need to see that the business has a real physical brick and mortar location. They typically will not approve people if they see they're working from the home. That's okay if you have a home-based business. It just means on paper you need to look like you have a real office. That's what virtual addresses are for. A virtual address through a company like Regus, R-E-G-U-S. These are companies that offer virtual addresses, which mean they'll let you rent basically a suite number from them. Okay, you use their suite number. Okay, and then it looks like you have a real physical address in Tampa, Florida, but really you're working from the home. So a business owner needs a real physical business address, and through our system, we not only explain this to a client, we also have checks where we're making sure they really have a landline phone number, that they really have a real business address they're entering, and if they don't meet a requirement, in one click, they can get connected to a solution where they can get that address. So for example, let's say they're going to it and they go, man, I'm working from home, I don't have a business address. Well, in one click, they can connect to a source like Regus that does have an address, and right through this system, they can actually get set up with a virtual address. And we've already negotiated with Regus. We've already got them a wholesale deal. So they're going to be going to a main company like Regus, or whatever product, depends on the company that offers the product. And they're also going to get a better rate than they'd ever get on the retail side. So this is nice because through our system, if you've got somebody that's an experienced business owner, they're going to fly through this. They've been in business a long time. They already meet a lot of this requirement. But if you have a brand new person, somebody that's just starting a brand new business, they could literally set up their entire business right through the system. It's amazing. And they're making sure their business is set up credibly from a lender's perspective. Again, if they don't have a toll-free number, if they don't have a fax number, if they're not listed with 411, all of those things they can actually do through our system because those are lenders' requirements before a lender is going to give them business credit or give them funding. A website, a business email address. Okay, they don't, and I've said this before in a presentation, they don't want to go and apply with an email address, partychick2009@yahoo.com. If they want to get approved, they need a real professional business address like Ty@DecodedSuite.com. Okay, that's a professional email address. So if they don't have that, if they don't have a real website, right through our system in one click, we'll actually get them connected with that. And let me also say that on the very first step you saw a video, each step comes with audio and or video with the system, and they also get a certified business credit coach. Only system in the world that's actually dealing with real certified business credit coaches. So your client doesn't just have to read this. They can go through it, follow the instructions, listen to audio and video with each step, even have a coach hold their hand and walk them through this process. EIN number, big. Real big. Okay, because the deal is that most people for vendor credit to start the process of business credit, one of the minimal things they'll want is an EIN number. If a business has an EIN and is listed with 411, they can start getting approved with business credit. Do they have a bank account open, for example? Do they accept credit cards? All those type of things we help them with right through the system, even making sure they meet the state, local, and federal requirements. You can't have a contractor that's unlicensed go in and start applying for business credit. On the application, they're going to want to see that person's license. They're going to want to know that person's license. So what we're doing in this step and what you're going to want to do for your customers if you're not using our system is make sure that the client actually meets these requirements. You need to make sure that they have all the requirements for the state, the local, and federal, because if they don't, they're not going to get approved for business credit. And remember, if they don't get approved, they may never know why. So you got to make sure that a lot of these things we talked about here today, that client will meet those criteria. I've spent my life in lending, and I love this. What we're basically doing is giving the client the lender's secret formula. We're not just giving them an application to fill out, and that is what they're doing in step one. They're completing an application. but we're actually telling them as they're completing the application exactly what the lender's looking for. It's like giving them a test and then beside the test putting the answers. That's basically what we're doing. And think about this. No lender's ever done this for them before, ever. No lender's ever given them an application and then sat with them and said, let me teach you now how to fill out the application so you can really get approved. That's something we're doing for them that no one's ever done before. And for the most part, once they set their business up credibly, then they're going to meet that criteria in the future when they actually go in to start building business credit and getting funding. Now, next we're going to jump into step 2. This is important because this is the end goal. Okay, the reason people get business credit, the reason people, want to build business credit, want to get business credit scores is to get money. That's what they want. They want money. Almost all people that are looking or interested in business credit, what they really want is money. And business credit is just a way for them to get the money. Now, it's important to note that through our system here, the funding suite, business credit is only one of over 30 funding products. Okay, even if you took business credit out of the system, this would still be something you could sell for a lot of money because we have 2,100 funding sources in there, more than any other system in existence. So what this means is it means before the business credit's built and after the business credit's built, the client has an opportunity, the best opportunity they'll ever have of actually getting approved for money. So in step 2, what they're doing is completing that funding application. But we're asking them, do they have revenue? Do they have credit card sales? Because here's the beauty. Remember, the purpose of business credit is to build credit so people can get approved with no personal guarantee, no personal liability. But what's amazing is there's a lot of funding available right now today that somebody can get without a personal guarantee that you could probably qualify for right now. I'll give you an example. I owned a credit repair business. Through the system, I was pre-qualified for $450,000 in funding, almost $500,000. Now, I had a good business, okay? But if I walked in my bank, they wouldn't even help me because I was in credit repair. My bank shut down one of my bank accounts because they thought I was in the credit repair industry. So a bank would never touch me, but through the system, I could get a ton of money. Why? Because I had credit card sales. Okay, so I had credit card sales, and I could just use those, or your client could just use those as leverage to get money. Even if they have a 520 credit score, your client could still get $100,000 in money just because they have credit card sales, for example. Or maybe they have revenue, or maybe they have inventory or equipment or purchase orders or receivables. Maybe they have a personal 401k. Maybe they have stocks. What our system does is brings all these type of available funding to them so they can get approved for all these different kinds of funding based on the strength of their business. Okay, if you go to a bank, they're going to go through SBA, which means it's full doc. They need 2 to 3 years financials. They need P&L statements. They need a million things. Okay, I did a webinar a couple weeks ago on all the stuff they need with SBA. Okay, but through our system, if they have credit cards, they could just supply their credit card statements and get up to $100,000. If they have revenue, they could just supply their bank statements and their merchant statements and get up to $150,000. Okay, if they have account receivables, they could get millions. Okay, we did a $25 million transaction through the system, and there was no personal credit check just because the person had receivables. So what happens is whatever the strength of the business is, maybe the strength is the business has inventory, maybe the strength is the business has equipment, maybe they have credit card sales, maybe the business owner has good personal credit. All of those things allow them to get money right away before we even begin the process of building business credit. Now, let me tell you why that's important. Because what we found is this. Everybody wants business credit. Nobody's patient enough to build it. People want money. So what happens is business credit takes 6 months to a year to really build. Most people don't want to wait 6 months to a year to build it. Okay, so they go looking for other sources to get money because they don't want to wait. We recognize that. That's why we've come up with a way for the client to get all this money right away. They can secure all this money in the first 30 days with the system before they even begin the process of building business credit. So what happens is you make a sale, client gets a ton of money, they're happy, they pay you back as agreed, they give you referrals. Even if they delay the business credit building process, that's okay because they still got a lot of money right away. So that's what our system will do, is give them access to over 2,100 funding sources in step 2 so they can focus on the strength of their business instead of supplying all their financials and everything where they stand a less chance of getting approved. Once they enter all this data, the system will pull up all the programs they pre-qualify for. Business revenue finance, unsecured business financing, utility vehicle financing, SBA loans. Guys, they can get financing to do wrapping of vehicles. You know those graphic wraps people put on vehicles? They can get financing for that. They can get financing for commercial signage. They can get financing to rehab properties. You deal with investors and mortgage people and real estate agents that want to flip properties. They could get rehab financing to actually rehab properties all right through the system. If somebody has good credit, check this out. Something you'll probably never see. They can get $150,000 worth of credit lines if they have good personal credit with no doc. No doc. They don't look at financials. They don't look at revenue. They don't look at tax returns, P&L statements. They look at nothing. If the person has good personal credit, then they're able to come in and get up to $150,000 in credit lines immediately through the system in less than 30 days. Now, don't forget, our goal is to get those kind of credit lines without the personal guarantee, and I'll show you how we're going to do that. But what we're talking about right now is before someone's built business credit. They haven't built the business credit yet, so they can still get up to $150,000 in credit line with a personal guarantee, but again, it's no doc, something you'll probably never see out there, and it works for a brand new business. Even if the business started yesterday, they could still actually qualify for that up to $150,000 in credit lines. Now, again, we list all the programs. They can listen to audio or video about the programs. They can even go to the programs and check this out. All that information they entered on the application auto-populates. Talk about cool. So now not only can they go get virtual addresses and everything else without ever leaving the system, now when they go to apply for funding, all the information auto-populates on the application. I mean, we can't make it any easier. They entered the data once. Now it's auto-populates on the application. They hit submit, and their application submitted. Now, it's important to note that when they hit submit, their application does not get submitted to the lender. It gets submitted to their own certified funding advisor. It's kind of funny. You take somebody from not being able to get any money. Now they're plugged in the system and they have so much money, we have to give them a dedicated funding advisor to help them understand and navigate all the funding. I mean, it's kind of funny. But that's what the advisor does. The advisor is there to help them with all aspects of the securing the funding all the way through until that money is in their bank account. So they have a business credit coach to help them with all aspects of the system, the business credit building, moving through the steps, and they have a funding advisor to help them with the obtaining of funding. Now, even if you're not using our system to sell business credit, this is where you get stuck. You might be able to learn how to build business credit. The problem is most people don't have access to the cash funding, and that's what people really want in the end. But again, through our system, over 2,100 funding sources. So through step 3, now we get the business credit score. So what we're doing in this beginning here is giving the client an overview of the business credit scores. We then help them get their data, their credit data, through Experian, Equifax, and D&B. Now, what you're seeing now is something called Experian Smart Business. So the business comes in and they enter their business name, address, phone number, and the system will tell them how many trade lines they have, do they have a business credit profile, do they have scores, do they have recent inquiries. All that data they get initially and all the way through the process for free. Ladies and gentlemen, this is the only place on planet Earth that Experian gives away access to their information at no cost. It's the only place. If you go to their website, they'll try charging you $100 just to get this data initially, okay? Through our system, they get it for free. So this goes to show you the credibility of the Business Credit Funding Suite. It's the only system in the world that Experian is part of, that Experian integrates with, that Experian takes their data and in real time, live data streams it into the system so the client can monitor their business credit building at no cost. Now, the client can get full reports with Experian, Equifax, and Dun & Bradstreet, but there is a cost for that. It's like $39 to $69 a month. But again, they could do it right through our system. Our system integrates with the bureaus, only system that does, and they don't need this. They're already plugged into Experian, and they can already monitor what they need to monitor without buying reports. They never really need to buy reports, but they can if they want to get the full reports. We also get them a free DUNS number through the system, okay? And when they get their first vendor account, then their actual DUNS number and their profile will be active with Dun & Bradstreet. We're the only ones, again, to offer that for free. If you try to call Dun & Bradstreet right now today, when we get done with this call, try calling them. They'll charge you $700 for the DUNS number and for the actual activation of the credit profile. And all in all, your client will spend over $1,000 to Dun & Bradstreet, Equifax, and Experian getting what they get through our system for free. Talk about value and talk about credibility. Having the only system in the world that integrates with the business credit reporting agencies, guys, it shows you how credible the system is. These agencies followed our clients for about a year with extensive data before they decided they wanted to be part of it. And when they decided they wanted to be part of it, some of the things they had to do was give concessions like free DUNS number and free Experian monitoring. Now, we move on to the actual building of business credit. Remember, I told you someone's going to need about 5 accounts to initially get started. Well, those are called vendor accounts. Remember, most people that start with consumer credit building, they start with small credit cards. It's the same thing in the business world, but they're called vendor accounts. So through our system, we give them access to more vendor accounts and merchant accounts for business credit building than available anywhere else. But let me show you the biggest difference. We tell what each creditor offers and sells. We tell who they report to. We also even tell what their terms are. But here's the big kicker. We give the underwriting guidelines for every single creditor in the system. Guys, this is, again, the only system in the world that does this. If you've ever even looked at a business credit building system, they give you a list. They tell you the company, their website, and who they report to. But they don't tell you what their guidelines are. So it's a matter of trial and error. You try to apply, you get denied. You try again, you deny. You try again, you get denied. You can't go to the creditor. The creditor's not going to tell you what their guidelines are. So we're the only ones out there because of our relationship with D&B that has this data. So we actually tack in the real underwriting guidelines for each vendor, each merchant, so they can know they're going to get approved again before they even apply. And of the over 40 vendor sources here, every one you see on this page, there's about 25 total that will work for a brand new business. So even if somebody worked today, opened their doors today, Radio Shack, Tiger Direct, Sprint, CompUSA, some major ones that you're familiar with, even if they just open their doors today, we easily make it so easy for them to come in and at least get 5 accounts to build their business credit. Staples, Quill, all of these sources. Each one we give the underwriting guidelines. Again, more sources than anywhere else. I'm just going to kind of go through all the pages. Look at these. These are all individual sources. All they need is 5. So once they go in and they approve and they apply and get approved, then they have 5. Macy's, Budget Rental Car, okay? Once they have 5, then they have a business credit profile and score built. And right from their dashboard, if I go back, then all of those accounts that they applied for are right here, and in one click they can actually go right to the application for the company and apply. And a lot of that data they already entered auto-populates on the application. Guys, we can't make it any easier, right? I mean, now not only do we give them the underwriting guidelines, now they can apply right through our system, go directly to the creditors, the merchant's system, and actually go in, and a lot of the data auto-populates on the application, making it even easier for them to get approved and to get to their real goal here, which is step 5, which is when they start getting credit cards. They start getting Staples, Office Depot, Shell, Tractor Supply. In step 5, they're really getting real merchant accounts or real revolving credit cards. Walmart, Costco, Amazon, Dell, Lowe's, Sears, BP, Chevron, Texaco, Speedway, Racetrack, Visas, MasterCards, American Express, all those. These are MasterCard. Okay, here's, MasterCard. Here's another MasterCard. We're actually getting ready to add more American Express in here. So it only takes somebody about 4 to 6 months to start getting approved for Visa, MasterCard, American Express, and then that brings them back to step 6, and step 6 is where we bring them back to funding. Again, remember our goal. We got them money. Now we help them build business credit. Now we want to get them more money without the personal liability. That's what they do in step 6. In step 6, they come full circle, and they're actually able to come in. Their application auto-populates. Now they can start coming in and getting approved for even more accounts without a personal guarantee once their business credit's built. Okay, we even have things like workbooks that help them prepare successful funding requests and how to grow their business, how to obtain angel investor capital. So everything they need to do is right through the system. And if somebody's coming through to build business credit, they can come in easily, get those 5 trades. That establishes their credit score. They can monitor all that report data right through the system in real time. And then once they do that, they can start getting revolving accounts, even start getting funding. And remember, we also get them funding right away. Within the first 30 days, we get access to a lot of funding for them based on the strength of their business. Even if they got 520 credit scores, even 470 scores, we've got programs in there that will approve them if they've got some kind of collateral or they have good credit. And again, we teach you in the training on how to go in and find these people, how to find the people that have the collateral, how to find the people with good credit. So that being said, let me kind of give you kind of a summary here of everything that I just actually went through. Actually, I'm not going to give you all that, but I will give you this information right here. Okay, so an overview of the funding suite. Okay, more funding and business credit sources than anywhere else in the world. Only system which integrates directly with Equifax, Experian, and Dun & Bradstreet. Only system where clients can get a free DUNS number and Experian Smart Business Credit Report. Only system with certified coaches for business credit and funding. And I didn't mention this, with the system, we give a $50,000 guarantee, which guarantees that clients will be approved for at least $50,000 in money, in business credit and or funding through the system. So everybody that buys the system, we guarantee that they're going to get at least $50,000 in business credit and funding. So what this means is it means you've got the potential to make huge revenue. Okay, currently our clients are selling this between $2,500 to $3,500. Let me tell you this. We have nobody, no client at all, selling it less than $2,500. Nobody. We've got clients selling it as high as $5,000, but $2,500 to $3,500 is a sweet spot where most of our clients are selling it for now. What you do is pay $700 per funding suite you activate. So you pay $700 and you pocket the rest. And you don't have to pay this until 3 days after that client is set up. So the client sets up, they get access to the funding suite, they've paid you, we give you 3 days for their payment to clear, then charge you the $700. And again, you're pocketing and profiting all the rest. So you have the potential to make a lot of money, Guys, here's the breakdown. If you sell 3 business credit units a month, even if you're doing payments, you're going to make $9,000 a month from the system. No back end, okay, no CROA, no problem with the bureaus. This is a product that people want. You're basically charging them $3,000 for them to get 50 or more, guaranteed, okay? And, it's something that it's easy to market, it's easy to sell, and it gives you the potential to make really, really big profits. And we've prepared all the marketing materials for you. Everything you need, email drips, marketing materials, everything you need to promote business credit, we do provide for you. So information on how to get going. You go to businesscreditexpert.com. That'll give you everything you need to actually get started. businesscreditexpert.com. If you have any questions, you can also call me. You can also email me, ty@disputesuite.com. Okay, so if you have any questions or there's anything I can help with the business credit, if you're interested in the funding suite, you visit businesscreditexpert.com, send me an email, give me a call, and I'll do everything in my power to help you. So I want to thank everybody for attending this webinar. And again, if you need me, you have my phone number, you have my email, you can send me an email, you can give me a call. The other thing I want to do is actually want to talk about if you are getting started today. I want to take you to businesscreditexpert.com to show you, talk to you a little bit more about the getting started. So if you want to get started with business credit, you got 3 options. Our bronze for $1,200, silver for $1,600, or gold for $2,000. Each of these comes with your own funding suite. Okay, so let me show you what I mean by that. The same system I just showed you, this system, you get for your business. You get to use it as a sales tool for client and for you to go through and get money for your business when you enroll. So when you pay any of these enrollments, even when you pay $1,200, you're getting your own funding suite, the same system you're going to turn around and sell for $2,500 to $3,500. Now this is valid through September 30th. That's Sunday. Okay, guys, I guarantee everybody on this call, our prices are going up. There's no questions asked. They've been going up since we enrolled, or since we rolled this out earlier this year. We don't want thousands of clients out there selling this. We want to work with a smaller group of clients that's doing higher volume. And I want to work with you one-on-one to help you do the higher volume. So as more and more people jump on board, we raise and raise and raise the prices. So the prices will go up, but what I will give you a guarantee is that the current prices I've quoted will be valid through this Sunday. We will not change them. We will keep them valid through this Sunday. After that, all bets are off. Okay, I guarantee the prices are going to go up. I just don't know when they're going to go up, but I will guarantee that the prices are going to stay valid through September 30th. And you can break them down into payments. You can break it down into 3 payments of $400 for bronze, 4 payments of $400 for silver, 5 payments of $400 for gold, and it's valid through Thursday, September 30th. Again, or excuse me, it's put Thursday, but it's Sunday, September 30th. Now, again, That means only $400 initial payment to get going. And when you pay the $400, you get everything. You get all the training, all the marketing materials, your own funding suite, even when you make the first payment. So that being said, let me take you to businesscreditexpert.com. Okay, let me actually go and show you the site. When you first get here, it's going to ask for your first name and your email address. Okay, then once you type that in, you're looking at a page like this. This video will show you all the materials you get when you first get started with business credit. This graph will list them all for you. Okay, so to get started with business credit, we give you free ebooks. We give you 6 months of email content, client testimonials. We give you written and business business training, 6 months of social media posts, marketing videos, free reports, ebooks, an actual full-blown website. Okay, you can go right here. This is the actual website you get. You pay $5,000 to have this built from the ground up like we did. This is one of the actual websites that you would get. Okay, here's another website that you get when you get started. We give you all the materials you need to be successful with this. So here's an actual website that you get when you get started. Okay, you can put your logo, make it completely yours. Business credit page. It's a 7-page website, professionally done. Okay, awesome, easy for you to look credible while marketing the product. Okay, on top of giving you press releases, free reports, ebooks, marketing flyers, articles, done-for-you webinars, sales scripts, everything. Guys, it's as simple as this. We don't want to just give you a product to sell. We want to give you the system built around the product to ensure you're successful with it. And that's what this is. You choose the level of marketing and advertising materials you want. You can click buy it now and do a one-time payment. You can do monthly payments. You can even listen to client testimonials down here about what they're actually doing. Ehab right here, even though this testimonial says he's only making $25,700 in his first week, now he's much different. He's making, I think they're doing over 50, 60 grand a month in revenue from selling the system. So there's a few great testimonials you can check out. And again, this graph will give you a breakdown of the materials you get. The video will show you the materials. So if you say, well, Ty, email content 6 months, that sounds good, but what is that? What are you talking about? Well, that's what this video will actually go through with you. It will show you the actual materials that you want. Now, what I'm going to do is I'm actually going to go in and show you. Okay, so actually, if you don't have to hang out here. I'm going over to the 2 o'clock mark. So if you don't want to stick around for this, you don't have to. Okay, but I wanted to give you at least the opportunity to see what things look like when you get started, what you would have access to, what's your training, what's your marketing materials. I'm not going to go through it all. That's what that video is designed to do. But what I do want to do is I want to actually show you what that will look like when you get started. So when you first get started, you're going to have access to our training and marketing materials, which look like this. It's all broken down step by step. Each step has a video. It's real easy to go through. Here's the training, for example. A few videos to check out. That's it. One video is less than an hour, gives you everything you need to get started. Okay, here's tools, it's pre-qualification tools. This is awesome. It's training for your sales team, so you can easily come in and train your sales team right through here. Comparison videos, marketing videos. I want to show you one more thing, and then I'm going to get to questions, because I know people definitely have some questions. This is what the quality of content we're providing looks like. Here's actual emails you're provided. You can see we're not going, buy from me today, email 1. Buy from me today, email 2. This is content email. Here's an email about Dun & Bradstreet. Here's an email about how to get approved with no personal guarantee, the $150,000 credit lines. These are detailed, informative emails that we give you to help you market the system, how a Paydex score works, and so on and so on. So it's all professionally done, and it's really easy for you to come in. Here's even every Tuesday at 3. In an hour, I'll be doing a coaching webinar. All those webinars are recorded and available here for playback, so you can come in and get even additional training. And all of that's available for you even when you make the first payment. So to get started, you go to businesscreditexpert.com. That will take you to where I was just showing you. I'm going to open this up now for questions, and we will wrap this up. Okay, do you need a license to offer this service? I'm in California, and am currently an NMLS licensed loan officer. The answer is no. You are not directly offering funding, so you do not need a specific kind of license for this whatsoever at all. What you're doing is selling software, basically. I mean, from a regulation standpoint, you're selling software. So there's no requirements that you have to have. There's no additional licenses. The Credit Repair Organization Act doesn't apply. You can market across state lines. You can advertise across state lines. You can enroll people across state lines. There's none of those kind of requirements for this as there is for credit repair. Any other questions, please let me know before I wrap this up today. Okay, I'm going to go ahead and do like a little wrap-up, just talk for a minute or two just to give you guys some time to answer any other questions you have. If you have questions, you could definitely type them in today, and I'll go ahead and make sure they're answered. If you don't want to, if you're shy and you don't want your questions to be addressed publicly, then email me. Right there's my email address, my phone number. I will be working with you one-on-one if you get selling this. So I'm also here, even if you're not selling it, to help answer questions. So if you just have general questions about business credit or like to know general things, then go ahead and email me. Okay, ty@disputesweet.com. My phone number is 877-600-2487. And that way I'll be able to give you, any information that you possibly need. So I'm going to go ahead and do a final call for questions before I wrap this up. No more questions. I want to thank everybody very much for taking the time to attend today. I hope you got a lot of good information. I don't try to pitch or sell a lot. I try to give you guys a lot of great data and then give you a solution if you don't want to do it on your own. So I'd love to work with you, but even if you're not selling our product, if there's anything I can personally do to help you, any questions I can answer regarding business credit, please give me a call, send me an email, let me know. Okay, thank you again so much, everybody, for attending this webinar. I hope you got a lot of great information out of it, and I know selling business credit gives you all a big income potential. I hope everybody looks deep into this, whether it's our product or not, because if you just add this to your existing product line, you can make a lot of money with business credit. Thanks, everybody, again for taking the time to attend this webinar.